Hello, I'm Spencer Levy, Senior Economic Advisor and Chairman of America's Research at CBRE, and this is the Weekly Take, where we share our unique insights on what matters most in commercial real estate and the world at large. This week, I'm joined by my friend Darcy Stacom, an industry icon and Chairman of New York City Capital Markets for CBRE, for a conversation about the capital markets amid the COVID-19 crisis. But first, let's take a look at last week's developments. The COVID-19 pandemic has accelerated in the United States in the last 2 weeks, causing vast portions of the American and global economy to temporarily shut down, hitting segments of the commercial real estate industry particularly hard, especially hotels and restaurants. The result of this temporary shutdown of businesses and restrictions on travel has caused the U.S. and global economies likely to have entered into recession. While the length of this downturn is the key question, CBRE expects that in the short term, second quarter GDP in the U.S. to drop by 20% and unemployment to almost double to over 6%. U.S. and world central banks and fiscal authorities have acted swiftly to aid the economy, including the passage of a $2 trillion fiscal stimulus package in the United States on Friday. This, combined with the trillions of dollars of monetary intervention from the Federal Reserve, the dropping of short-term interest rates to zero, and other global fiscal and monetary support, gives CBRE optimism that the downturn, while severe, will be short, and we expect a strong V-shaped recovery to begin in the third quarter and accelerate into 2021. Commercial real estate capital markets felt the brunt of this rapid slowdown in the form of slower sales and debt and structured finance transactions in the last 2 weeks. This slowdown is expected to continue for several weeks or months until there is a material improvement in the COVID-19 caseload and restrictions on freedom of movement and forced government shutdown of businesses are removed. Despite the slowdown and several transactions falling out of contract or financings canceled, many are still getting done. While most of the deals CBRE completed in the last 2 weeks were in multifamily and industrial, the two asset types likely to be most resilient during this crisis, CBRE closed several hotel and retail sales and financing, along with construction and bridge loans. The debt and equity capital markets are and will remain open during this crisis, as most industry professionals believe the crisis to be short-term, which does not fundamentally alter the long-term outlook towards commercial real estate. Landlord-tenant and property management issues have taken center stage in the last few weeks, and this will continue, as April 1 has emerged as a key date of concern with respect to rent collection for those tenants whose businesses have been impacted, and mortgage collection from the landlords of those same properties. Fannie Mae and Freddie Mac have taken aggressive action to permit forbearance of mortgages or short-term loan forgiveness for those impacted, and, along with many state authorities, have put restrictions on evictions during the next 90 days. Bank and other lenders may follow suit, as the FDIC has given guidance to their member banks, giving expanded leeway to offer accelerated relief to their borrowers. Despite the great economic and commercial real estate challenges in front of us, there is reason for some optimism. Our optimism is based on the rapid intervention of the Fed, which caused spreads to modestly compress late last week. The stock market staged a strong comeback, and based on these improvements and CBRE's weekly survey of its professionals, we believe that the debt capital markets may have hit bottom 2 weeks ago and are on the road to recovery. I'm now delighted to introduce Darcy Stacom, the chairman of New York City Capital Markets for CBRE, an absolute legend in the New York City real estate industry and a good friend of mine. Good afternoon. Thank you for joining us on our inaugural Weekly Take.
Thank you, Spencer. Nice to be here.
Great to have you, Darcy. So, Darcy, we could talk about the professional side, and we will in just a moment, but I want to start on the personal side here, because I know, Darcy, over the last couple of weeks, you have gone out of your way, not just to help, but to advocate others helping in big and small ways, because there are so many unsung heroes out there, from the medical workers on the front lines to the property managers that have to go into the office buildings to keep the lights on for everybody today. Darcy, what are you doing to help now?
I've worked really hard to connect a lot of people that are in the medical field, and other colleagues at CB have been terrific about that as well. We've connected them to New York State, to Connecticut as well. I've personally been working with the Chinese General Chamber of Commerce, who has been terrific and has sourced and donated 15,000 masks to Harlem Hospital. My family have worked and found 7,000 pairs of medical gloves, which we donated to the Connecticut hospitals. And then personally, my favorite was taking 200 surgical masks somebody had sent me and giving it to Bridgeport emergency room. So be personal now, it counts.
Darcy, the big and small things that you're doing are making an enormous difference in your community. But I would also say that you are an inspiration not only to the professionals in our industry for being so positive during this time, but also an inspiration to the unsung heroes, both in the medical profession and our property managers who are going into these buildings every day to keep moving forward so that we get out of this crisis sooner.
Darcy, let's turn a little bit to the professional side. And Darcy, you've been around for quite some time. I'm not suggesting you've seen it all, but in your 30 plus years, you've seen a lot. So for the purposes of helping our listeners understand what's going on, how would you compare what's happening today to what you've seen in the past?
Yeah, look, I've been around a while. I've definitely seen a lot of cycles. I would say that this most reminds me of the 9/11 attacks, which was, of course, an attack on people, an act of war. This is, of course, another attack on people. The difference being that after 9/11, everybody was very compassionate, ran out, donated everything they could, volunteered wherever they could. Here, people are fear of contagion and hunkered down. So, this is a great time for everybody to remember that if you got 50 masks and 600 pairs of gloves, take them to your hospital. You don't need that many. You're in self-isolation. Economically, it a little bit reminds me of 2008 in the sense that the capital markets or the credit markets did seize up there, but they seized up entirely. We have seen damage in the CMBS market. We've seen a European bank pull credit lines on some mortgage REITs, but quickly get slapped back for doing so. The feds are helping. Well, hopefully we'll see some help within the consumer spending, corporate earnings, and therefore, we'll be able to maybe through self-isolation get through this crescendo and recover more quickly than 2008.
Well, Darcy, I'm in the same boat as that. I actually see objective signs of optimism that will snap back more quickly, not only based upon what's happening in China today, where they seem to be snapping back more quickly, but also what happened in SARS in 2003. So let's keep optimistic because I do think there's objective signs of a quicker snapback. But in the meantime, we're in a period here, whether it's the next 30, 60, 90 days or beyond, that the capital markets are going to slow down materially, both on the sell and the buy side. So let's start on the sell side. Darcy, what are you advising your clients to do today who are thinking about selling their assets in New York City?
Look, we've largely placed our transactions on hold. We had a large trophy in the market. We advised the client to pull it because you just can't get the crews through to do the type of consulting work they need to do. You can't put a lot of people into an enclosed elevator machine room. And so we said, let's go on pause and let's get past this. Unless you have a unique circumstance, it makes sense. Sales markets work best when corporate earnings are good, when supply pipeline for construction is good, when mortgage availability is real. And we need time to get at least the latter two of those in place. And without any clarity, our results are going to be impacted. So ultimately, there's a wall of money out there and interest rates are zero. This market will come back.
And I agree completely. And I would also suggest that for the best borrowers, there's still debt capital out there. The debt capital markets, as you suggested, Darcy, shuttered, but did not shut. And there's still money out there, which I think is a really encouraging sign. At the same time, because of the terrible news, both headlines and real in the marketplace today, there are a lot of buyers that are circling, both domestic and a lot of international buyers. And I know they're calling you, Darcy, based on the calls we had prior to this one, looking for deals. What are you telling them?
Well, are they the vultures or are they the buyers? If they're the vultures, I'm telling them this is about humanity. I'll be back to you later. If they're real buyers, we're having real conversations. Like we've heard from a group out of the Midwest who has $400 million that had had a really hard time competing in the New York market. They just couldn't move at the speed of the sophisticated investors here. So they've said, look, we're still interested. We're still ready to pay real dollars. Help us through the process. A group out of Asia, 150 million of equity. Again, couldn't move at the speed of New York City. So I do believe that there are real players looking to buy. I'm going to counsel them that they want to really focus on location. Intercity travel is critical with the submarkets breaking down. Physical asset, medium-term lease exposure, and yield. Those are the things to focus on.
So Darcy, we've talked at great length today about the markets. We talked about some of the personal things that you're doing and what others should be doing to help out in today's crisis. But given your vast experience, personally and professionally, I really just want to ask, what message do you have for the first responders, the medical workers, and for the unsung heroes, the property managers and others that have to go into work every day in the face of this crisis? What do you tell them to do to cope today, but to come out on top tomorrow?
We will survive. Cycles come and cycles go. This is when you have to take care of yourself. Make sure on a business point of view to ask questions. At times like these, no question is stupid. Great careers are made in markets like this when they're impacted. You learn, you study, you grow, and you get ready to hold on when the momentum grows. And on the personal side, I would say, remember to reach out, volunteer, help a charity. Many are hurting right now. Do something to help a local healthcare or hospital in the area, because those are the people that are taking the brunt of this. And that's where we need to be saying thank you.
Well done, Darcy. And on behalf of our entire team, personally, professionally, thank you for being our inaugural guest on the Weekly Take. Next week, I'll be joined by another good friend of mine, Chris Ludeman, Global Head of Capital Markets at CBRE, and make sure to hit subscribe so you don't miss an episode. If you have questions you'd like to submit to me or CBRE's global experts, send me a note on LinkedIn or an email at spencer.levy@cbre.com. You can follow me on social media, and remember, you can get the latest commercial real estate news and analysis locally, nationally, or from around the globe anytime at cbre.com. Until next week, be smart, be safe, be well.